Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, good morning.
Hi, good morning. So markets were down. The Indian markets were down for 2 consecutive sessions, and it was quite the wild ride, volatile session on Wall Street yesterday. The Dow swung in a 900 points band. The question is, can we snap that? Can the markets now move on, the Indian markets, or is it going to be a bit of a cautious trade?
Well, that's what interesting times, right? We're approaching Diwali. Hopefully, some kind of the festive spirit comes into the Indian markets as well. It's been a dull last 1 year, so hopefully we see a turn of fortunes.
It's like a curse, right? You get to 25, 400, 500, and then back down to 25. So, as I think who put it, right? Pratik or someone put it, liquid oxygen. Liquid marne nahi dega, oxygen marne nahi dega, liquid जीने नहीं देगा, something it was. But I think it was well put, because that is the state of the market, not breaking down, but not really taking things out in the upside as well. So let me just quickly run you through what's lined up here, in terms of how we are set up. So slight drift basically, and it's not all bad. I mean, the China-US hostilities, I think, what the market paid attention to. And that came right at the close, towards the end of the US market session. S&P ending about 0.16. The Nasdaq was down 0.75%. But even as the S&P and Nasdaq were down, 8 out of the 11 sectors, big sectors, ended in the green. So it basically, you can put the blame for last night on large cap US tech, things like Nvidia, etc., which sold off a little bit. Now, what about that US-China? Trump, essentially, President Trump put out a post on Truth Social saying that China is purposefully not buying US soya beans. Of course, that is true. And he called it an economically hostile act. That is a tweet that I'm referring to. And I think he's sort of looking at stuff on cooking oil and terminating business with China having to do with cooking oil and other elements of trade as retribution. So maybe a bit of a escalatory ladder. We don't know, right? I mean, it depends on which post, which day you're looking at all of this on, because, I mean, the last one, of course, was that it's all going to be fine, and the markets responded to that. Now you've got this. So in any case, I mean, it's not as if there was a big sell-off or anything. Wix shot up about 10%. It had cooled off substantially the previous session, about 20.81. There were remarks which were made by Fed Chair Powell. Other Fed, some voters also spoke, but I'll just refer to Fed Powell, who basically signaled that the Fed is on track to deliver another cut in October. I'm just giving you the headline there. Of course, there was a fair bit of other stuff which was said. And in terms of macro markets, dollar index down about 0.25%. We're at about 99. Spot gold prices continue to move higher. Boy, what a move. Now closer to 4,200 than 4,100, 4,163 or so. Spot gold about 1.25% higher. Oil prices sold off a little bit, but about 62 or so is where oil finally ended. Every day, almost every day, every second day, there is a tech deal. Now, this one was Walmart and OpenAI. And Walmart ended 5%. And we'll tell you more about this, but there's a partnership which has been announced. And the AI rub-off impact, if you want to call it that. Levels, etc., don't change very much. I mean, I've just calibrated a little bit given what yesterday's session sort of brought to us. Resistance is the recent high, which is 25,330. I mean, basically it was 25,220 and then 25,330. So 25,330 is the upper level. 25,000 roughly is the downside level, which is what I was referring to earlier as well. And the Nifty Bank resistance, I mean, the high of the last 3 days is 56,770. You basically very, very tightly ranged. And this is about 1% away from where we left off yesterday, not even 1%. And support 55,821, which was the swing low that we had, I think, about 5 or 6 sessions back. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick it up from there. 80-point bump once again. So, I mean, given this open, it's basically a reversal of what we saw in trade yesterday. But, I mean, we've got to go through the rest of the session, the full session, and I think we'll find out what happens. Lots of individual stocks also in focus in a bit. But F&O positioning, F&O stats, Nigel has walked across for exactly that. Nigel, morning.
Well, morning. In the last few trading sessions, the DIs, they've kept showing us the money. The problem is the FI flows that briefly turned positive. Well, in the last few trading sessions, from a positive 1,000 crores, it's come down to a negative 1,500 crores odd. As long as we don't get the 2.5, 3,000 crores of net selling, I think the market should be okay. But you don't want this number to move up from here on the way it's been doing in the last few trading sessions. So the FI flows, they have turned around a little bit, but hopefully the large selling is behind us. That's the hope with regard to the FI outflows. What did they do in the F&O market? Well, they went ahead and they added short positions yet again. 9,000 contracts is what they added. And that takes the short positioning to around 93%. So this market is net short. We need that good news. We need the markets to cross some of those crucial technical levels, which in that case will lead to a short covering bounce. Even in the stock futures, there's normally an arbitrage that takes place out there, but out there as well, they added more shorts and they unwound some long positioning in yesterday's trade. Some part of yesterday's fall could be attributed to the weekly expiry as well that played out on the NSE itself. But because of the realignment in terms of call writing that we saw that came back into play, the PCR that had danced away to around 1.35 odd, that's cooled off to around 0.82. So that's moved to the lower end of the band. And two strikes were fairly active in yesterday's trading session. So the 25,200 call added 40 lakh shares out there. Premium around 125 rupees, and the 25,100 put, well, that added close to 17 lakh shares. The premium were there around 100 rupees. And these premium levels with the strikes, as well as the recent high and low, give us the perfect range that we're looking at. So we're in this tight 330, 350 point band on the Nifty itself. Support is around 25,000. Yesterday we went to around the 20 DMA, which is ballpark around 25,050 odd. And from there, we did see a bit of a bounce. So the 25,000 mark becomes important in terms of a support. And you'll be fancying your chances that maybe, in fact, the bulls have enough to protect that level. On the upside, though, for the last few trading sessions, we've been going to that vicinity of around 25,331 and seeing a bit of a U-turn. The Nifty Bank, that will have to lead the way. It bounced off yesterday's lows as well. But as we can see in the last few trading sessions, the 56,775 odd, that's a bit of a resistance level. So the Nifty Bank needs to get past this zone. Last few trading sessions, the highs are closer to that mark. In terms of stocks that I'm looking at, well, RBL Bank is a stock that I'm going to keep an eye out on. Both Saman Capital as well as RBL Bank, they're in the F&O band. However, RBL Bank, there needs to be some shedding in terms of open interest, and it could very well be on its way out of the F&O band. It's giving you the sense that the shorts in the system are getting a little bit nervous with that stock going into the F&O band. So I'll keep an eye out on RBL Bank, possibly in the next couple of days, comes out of the F&O band.
Thank you very much for that. Yesterday, Fed Chair Jerome Powell also delivered a speech at the National Association for Business Economics Conference in Philadelphia. This speech marked his first major public address since the Fed's September policy meeting. It's also important to get a sense on what he said because of the absence of any economic data coming out of the U.S., given the government is in shutdown. So listen in to what he had to say. In a nutshell, what he implied is that the outlook for inflation has not changed since September, but the downside risks to unemployment have risen. Listen in.
Based on the data we do have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago. Data available prior to the shutdown, however, show that growth in economic activity may be on a somewhat firmer trajectory than expected. While the unemployment rate remained low through August, payroll gains have slowed sharply, likely in part due to a decline in labor force growth due to lower immigration and lower labor force participation. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen.
Okay, broadly consistent with his prior projections.